Hi students, welcome to Financial Accounting video lecture. Hope you are all well. Understanding the previous Financial Accounting video lectures and present video lecture is based on the accounting systems which are followed in all over the. They are single entry system, another one is double entry system. In addition to that, we are learning accounting cycle also. Accounting cycle also. Okay, students. So two systems are there. Each system, what our computer system will do. Computer system will record the information, process the information, and stores the information for us. And it deliver the information whenever it is required. Whenever it is required. In the same manner, accounting system also will record our information, process our information, and stores the information in the language that is required. Later, it will deliver the information in the form of financial statements for the stakeholders who are ready to use that. Okay. So, what we are going to learn in this are, look at our syllabus. Introduction completed, definition of accounts we completed, evaluation of accounting. Then we learned about father of accounting, double entry system, lookup passively, started in 1445 and developed to the present system with many changes, advantages, limitations of accounting, double entry accounting, use of accounting, users of accounting information, branches of accounting, accounting principles, those are concepts and conventions. Our double entry system is depend upon one concept called dual aspect. Accounting standards, there are many boards are there. We understood about Indian Accounting Standards Board and International Accounting Standard Board, ICAI, and importance list of there are 32 accounting standards are there. And accounting, now we are discussing about accounting systems. Accounting systems are two. One is the single entry system, another one is double entry system. In addition to the accounting systems, that is single entry and double entry, here we are learning accounting cycle also. Okay, students. Now, what is double entry system? Before that, we understand single entry system, which is not a popular one. Just for understanding double entry, we can understand, we will memorize this single entry system. It is incomplete of records. Intermediate level, we studied this single entry system, and it is preparing only cash accounts, real accounts as well as personal accounts. Nominal accounts were not prepared. Only cash, those accounts are accounts only prepared. So it is not full-fledged system. It is incomplete records, incomplete form of records, which does not record two aspects are accounts of all the financial transactions. Okay, it won't record two aspects. What are the two aspects? Dual aspect. What is dual aspect? Debit, credit. The debit increases, credit will decrease. If the credit decreases, debit will increase. One account is benefited, other account will be lose. It will lose its form or its benefit. Okay, that is double entry system. But here it won't follow this. dual aspect. It is a system which has no fixed set of rules to record the financial transactions of business. Students will learn purchase or debit, sales or credit. Purchase returns are credit, sales returns are debit. Whenever we receive cash from a party, party account should be credited because he is a giver. He is giver. So such rules here were not applicable. We were not following any rules in this single entry system. No fixed set of rules to record the financial transactions of business in this single entry system. We are understanding this single entry system. Number one, it is an incomplete record of financial transactions. It is not based on the two aspects of accounts, and it is not having any fixed set of rules. Set of rules. So the features of single entry system already we discussed. One is no fixed rules. It is not following any logical debit the receiver, credit the giver, what comes in debit, what goes out credit. All expenses and losses should be debit. It is not following such rules. It's the rule will be like this. Okay? Already you know very well. Profit is equal to closing capital minus opening capital. Profit is equal to closing capital minus opening capital. Capital is derived with the help of accounting equation assets minus liabilities. Assets minus liabilities. So the features of single entry system. Number one, no fixed rules. It is incomplete system. It follows or prepares only cash related items or cash, and only personal accounts are prepared. Only personal accounts are prepared. Variations in applications. When it is adopted, system organization to organization, different variations is there. Profit formula is okay, closing capital plus drawings minus opening capital. Here it was written wrong. Closing capital plus drawings minus opening capital is equal to, very simple. Capital formula, assets minus liabilities is equal to capital. Okay, students, that is the single entry system. Now we are moving to the important, very important aspect, which is followed by dunia, worldwide. All accountants are following the system. That system is a double entry system. That system is a double entry system. Double means two, dual aspect. Okay, we have to remember one account is getting benefited, other account will automatically lose the benefit. One account is getting benefited, other account will be automatically losing the whatever the account it is. Okay, have you observed this balance when we are discussing about history of accounting? Balance is both sides equal. When the credit increases, debit automatically decreases. So that is double entry system. This is a modern system is based on double entry system, which is based on the fundamental accounting equation. Earlier video, we did a practical accounting equation. Whenever we purchase furniture for 1 lakh, furniture is added and cash is deducted. Furniture account is got benefited, cash account lost benefit. Okay, so this double entry system is based on accounting equation. The accounting equation is based on dual aspect. One debit is equal to credit. Debit is equal to credit. The double entry accounting system ensures that the accounting equation always remains in balance. Students, observe the earlier video, 4 lakhs, 6 lakhs, 10,000. 13 lakhs 11,000, 12 lakh 10,000. Like that, every time for each and every transaction, our accounting equation is tallied. What is our accounting equation? Assets is equal to liabilities plus capital. Equity is nothing but capital. In same manner, it will be tallied. So debit must be equal to credits. Students, you had an experience in at intermediate first year, all the debit you total it will be equal to credit. It has to be equal because whatever the benefit at debit recorded, automatically credit benefit will be lost. Okay, students. So under this double entry system, debit must be equal to credit. So this system is called double entry because every business transaction has dual aspect and affects the at least two accounts, either debit or credit. It will affect the debit or credit. It will affect debit as well as credit. Sometimes it will affect only two types, only assets. Sometimes it will affect only liabilities. Sometimes it will affect assets as well as expenses like that. Every transaction must contain at least one account debited and at least one account credited, thus posted in at least two different ledger accounts. Simple to understand, students. Cash received from Razu. What we received cash. From whom we received Razu. Razu is a giver. Giver should be credited. Cash is coming in. Cash is debited. Our entry is cash account data to Razu account. Cash account got benefited. Razu account lost benefited. Both should be posted in a ledger account. One is debit, another one is credit. Whenever we made a trial balance, it will equate. It will equate. So every transaction must contain at least one account debited and another account credited. This we will understand very easily when we are preparing journal entries. Our journal entries consist of one debit and other credit. Under single entry means only one debit and one credit, and one debit more credit, and one debit more than debit and credit. Many items are there. That is called as compound entry. We understood this concept in while preparing journal entries. Every transaction must contain at least one account debited, another account is credited, thus posted in at least two different ledger accounts. Cash received from Raju, we posted in cash account as well as Raju. For every financial transaction recorded in the accounts of a business, there is a debit entry and credit entry. Furthermore, the total of entries on the debit side must always equal the total of the entries on the credit side. Same manner, Raju cash account data to Raju account. Cash debit amount is 50,000, credit amount is 50,000. When you total, debit is equal to credit. So for every financial transaction, business, there is a debit entry and credit entry. Both the debit side and credit side must be equal. All business transactions consist of an exchange of one thing for another. That we have to understand. Exchange of one thing to the other. Earlier example I told, cash received from Razu. Razu cash is exchanged from Razu. Razu gave cash to cash and cash is increased. Raju's debt is decreased. One is For all the business transactions, one exchange of one thing for the another. I purchased furniture. Suppose computer I purchased. I am receiving computer. I am losing cash. And an exchange of one thing for the other. And computer is exchanged with the cash. Computer is exchanged with the cash. So journal entry will be computer account data to cash account. Cash is going out. Cash is going out credited. Computer is coming in debited. According to the double entry, at least one debit and one credit. These are posted into two ledger accounts. One is computer account, another one is a cash account. Okay, students. Then the original entry in the books of business that records debit and credit aspects of a source of documents that evidence a financial event is called transaction. Okay. Suppose cash received from Raju. Raju came to our office and paid cash. We will record a voucher. That voucher is called as a, that voucher is converted into transaction. That voucher is converted into journal entry. We had an evidence. We had an evidence. Under the original entry into the books of business that records the debit and credit aspects of source document that evidence a financial event is called. So the financial transaction, which is cash received from Raju, is recorded in the form of journal entry. Recorded in the form of journal entry as well as debit and credit. Purchasing goods, paying bills, receiving cash, selling goods, recording depreciation, making payments, adjusting prepayments, etc. are the examples of business events which are need to be recorded in terms of transactions. Okay, purchased goods, we have to record. Purchased goods on credit, we have to record on party name because we have to pay money to party later. Until unless we were not recorded purchases in the name of the party, then we cannot pay the amount. Once we recorded the transaction in the name of the party, then later party account will be debited, cash account is credited. Every transaction must include at least one account debited and at least one account credited. I already told that under double entry system, one account is debited, another account is credited. One account will be exchanged the benefit with the other because of accounting equation. That accounting equation is depend upon dual aspect. That is, each transaction is having effect on each other. Used in credit, debits and credits are the system of notation used in bookkeeping to determine how to record any financial transaction. In recording the financial transactions, we were used debit and credits, DR and CR. Okay, so these notations for record purpose. One is we will write the cash account data to Raju account because we received cash from Raju. So cash account data DR we will write. It indicates that in cash account debit side we have to record that cash amount with the name of Raju to Raju 50,000. So in this system we use debit and credit notations. Now we are understanding what are the advantages of double entry system. And one complete record of transactions. Accounts are three types. In next video we'll understand three types. In single entry system, only personal and real accounts were recorded. But in the double entry system, okay, personal, real, nominal accounts are recorded That's why it is called as a complete record of transaction. Check and accuracy. Check and accuracy. Students, our double entry system is based on dual aspect. For every debit, there is a credit. Debit 50,000, we will write similar amount 50,000 in credit. Debit 5,000, we will write similar amount in credit also. That's why at any time, at n number of transactions, after completion of 100 transactions or after completion of 200 transactions or after completion of 3 months, our debits are equal to credits. This system helps us to check the accuracy. Determination of financial position. With the help of double entry system, we can prepare financial statements like profit and loss account and balance sheet. Balance sheet will reveal what is the position of a company. The position of a company. Scientific system. This is having some rules. How many types of accounts? 3. What are they? Personal account, real account, nominal account. Personal account, real account, nominal account. So, personal account is having its own rules, real account is having its own rules, and nominal account is also having its own rules. So, we have to identify the transaction, we have to find the accounts in that transaction, we have to apply the rules according to the type of the account, and based on that we will debit one account and credit another. Only by using the scientific system only we can debit the one account and credit the other account. Okay, not simply we will write an ascertain of profit or loss. With the help of this double entry system, we prepare trial balance and later we prepare profit and loss account and balance sheet. Ascertainment of cash balance. Next chapter, next unit is subsidiary books, where we will prepare a cash book of single, double, and triple column, single column, double column, triple column petty cash book, where we can find the cash balance. Preservation of fraud, prevention of fraud. Okay, so whenever accountant or manager or general manager, whoever want to check, simply they will find whether debit is equal to credit or not. If it is not equal, then something is happened. They can easily find out whether the fraud may happen or not. Better control and decision making. So, because of recording this financial transaction in a systematic manner, okay, there will be control and use it for best decision making, comparison of results. Pura dunia is following this double entry system. Our company records or company financial statements we can compare with the other company. Based on that, we can take decisions. Okay, now we will understand disadvantages very far. Requires thorough knowledge. This is quite difficult. Even present BCom students or present people, those who are having commerce knowledge, cannot understand or they are in dilemma what to be debit and what to be credit. So other than even people with the proficiency of accountancy are unable to judge what to debit and what to credit, think about other people. Think about other people. So one disadvantage is specific knowledge is required. It's not a general knowledge, specific knowledge is required. Increase the volume of accounting work. So look at our accounting process. Transactions, first those were recorded in vouchers. Based on the vouchers, journal entries were prepared. Each journal entry is having two. One is debit, another one is credit. It should be posted in debit as well as credit. And later, Later, it will be posted in debit as well as credit. From that trial balance, from that profit and loss account and balance sheet, adjustments, many huge volume of work. So, students, but don't worry about this. Computers entered into our accounting, made them as computerized accounting. They made very easy. You are up to journal entry, remaining work done by the computer. So if you are perfect in passing the journal entries, you can feel free, remaining work done by the computer. So presently it is not an advantage increasing the volume of accounting work because computers were doing a great job. Only records of financial information. We are recording only financial information only. Records historical costs that already we understood in accounting concept, that is cost concept. It will record only cost, not market value or inflated value. So these are the disadvantages. Now look at the accounting cycle. It is a rotating work. Accounting is a rotating work. Starts with the transaction, ends with the transaction. Starts with the transaction, ends with the transaction. Accounting cycle is the process by which accountants prepare financial statements for an entry for a specific period of time. In a month or in a week or in a 6 months time period, the accountants will do this. Okay, what they will do, look at. Analyze the business transactions, whether it is financial or not. If the financial transaction is there, they will pass journal entry, post into ledger account. Ledger accounts are updated and prepared, trial balance, journalize and post adjustment entries. Suppose if any adjustment entries are. Later they prepare adjusted trial balance. From that, trading profit and loss account and balance sheet, and they will pass closing entries, prepare a post-closing trial balance with the closing entries, and those are based on the transactions. These 10 works or 9 works are repeatedly doing by the accountants. That's why it is called as a cycle, accounting cycle. Accounting cycle. Okay, students. Today we learn two systems of accounting. One is single entry, another one is a double entry. And in addition to that, we learn accounting cycle. Accounting cycle. Okay, students, look at the subscribe button and press the subscribe button to get the updates. Even though, bye, take care.